This is a monumental week for the dollar with big inflation data in focus. Which way is the dollar go? Because this is certainly going to dictate the new dynamics of how the dollar's moving. Okay, guys, before we get into the details of what we're looking out for, I want your attention on a macro level, on an economics 101 point of view. Now, with inflation, why is it such a key part of influencing the currencies that we're trading? It's a key part because it shapes up a central bank decision. And central bank decisions have an influence on not only the currencies that you're trading, but also on stocks, on gold, on multiple asset classes. It's so key, so it's critical never to overlook these inflation figures. So the situation with the United States, like many economies, through the last couple of years, we've seen excessively high inflation. You know, the costs of living has been high for everybody globally, right? So inflation, prices of goods and services have been rising drastically. Now, what central banks had to do in order to counter the rising inflation, okay, which is going through the roof, as I'm sure you would have seen in your everyday lifestyle, right? What they had to do was raise interest rates. They had to raise borrowing costs, right? Remember, when they're raising interest rates, that's the cost going up on your outstanding mortgages. Your rents will be going up, you know, your outstanding loans, balances, everything. Just your cost then, right? Your borrowing costs will go up. So you're going to be more on edge, you know, more reserved to want to go out and spend money, right? It's a bit of a tactic that the central banks have to do. It may seem negative, but it's something that they have to do in order to control out of control spending, out of control rising prices. Because if we continue to go out, spend, and our borrowing costs are low, we're just going to continue to borrow money, go and spend, borrow, spend. And then these businesses that are offering these goods and services are going to keep putting up their prices. Do you understand that? That's important that you get your head around that. Now, so as I said, they had to raise rates. As you've seen major central banks across the globe keeping rates higher for longer. Now, there's signs of potential slowing down from that rising that we've seen drastically. So then what does a central bank need to start looking at potentially doing? They need to potentially lowering interest rates, okay, lowering borrowing costs, because if people are not spending as much and the economy is perhaps contracting a little bit from these higher costs, so on and so forth, and it's taking a squeeze on the consumer, then of course the central bank needs to start easing those conditions, okay, start lowering rates again, only if inflation's coming down, because they don't want to do that too prematurely. If they do that too prematurely, what do you think is going to happen to inflation again? Silly people are going to be like, yeah, let's go out and borrow more money again and spend. If rates are coming down, fantastic. You know, and the thing is, and this is going to, I'm going to save this for a whole different video, guys. Okay. I've got a really serious amount of shit. I'm going to say it, shit, that I need to share with you, right? But I see something. Okay, I see something happening in the economy, right? Because there's a lot of data where you can see Americans are maxing the hell out of their credit cards. These guys are lunatics, man. And at some point, they're going to feel it. Okay, things are going to hit the fan. But anyway, back to the point. Central bank doesn't want to be cutting rates too prematurely because of what I just explained. Inflation will go up again. Now, the debate is coming to play at the moment because we're seeing signs of potential, a little bit of lag in the economy and certain data points easing in the labor market data, which is disinflationary, signs that inflation isn't rising as much as it was. It's starting to topple out a little bit and come down. So then now markets are trying to price in rate cuts. Okay, they want multiple rate cuts. Initially, the markets were looking for one. Okay, I always said that, you know, when the markets in 2023, right, we're expecting all those cuts to come for 2024. They're expecting cuts like throughout 2024. With the TFTC premium community, right, and those that are part of that will know, we were ahead of the curve because we were ready for that dollar bounce, that big dollar bounce that we saw at the commence of 2024. We were ready for that because I said markets are being delusional. We're going to start repricing in, pushing back these rate cut expectations because the data just didn't warrant it. Okay, the data did not. The economy was solid. It's still hot. Inflation was still high. Why the hell are you pricing many cuts in 2024? And we were ready for that and we capitalized on that, right? You see, the way I think, it just, this is all about experience. And I put all of this into the fundamental course, right? I know that all the people that have come through that enjoyed that course because it's full of value, hours and hours and hours of my knowledge, condensed, simplified, not overcomplicated. So if obviously you're serious about leveling up your game, you can check that out. Otherwise, check out the premium community where every day we're going into in-depth analysis putting things hand in hand with the fundamentals and the technicals and how that relays on the chart. But as I say, if you're interested, you could check that out. But otherwise, let's just talk about these inflation data points that are coming in this week. So if we start off on the dollar, in the latest week, first of all, we managed to finish just about in the green. You can see there was a lack of commitment, and there has been since this cooling. All right, remember this cooling was now markets pricing in 2 cuts to come from the FOMC. We've seen CME pricing when we looked at that. You can see sort of September and November, December, markets are expecting there's a decent probability that those 2 cuts are going to come within those months from the FOMC. Now, with regards to inflation, guys, remember we went over all the key components heading into the inflation. We saw, various inflationary figures that are just suggesting that we could see higher inflation. So markets are gearing up for potentially higher inflation. So once again, I will say this, that the odds are stacked against the dollar, because if inflation does not come out as high as expected, right, dollar's in trouble. Markets are really going to ramp up those bets for those rate cuts, and the dollar's going to lose a lot of edge, okay, in this latest week. Obviously, if it's higher, the dollar is going to push to the north. But we, first of all, starting off on Tuesday, we've got those PPI figures. Remember, this is the producers' prices, the cost it costs for the producers of the goods that the consumers consume, right? They're the producers' costs. Obviously, this isn't as big as the actual CPI, the consumer, i.e. you and I, in terms of our costs, our general living expenses. That's the big one, which comes on Wednesday, allied with retail sales. Now, if you look across the board, bar PPI up here, markets are expecting a slowing down in CPI, inflation expected to come down in these latest readings. Obviously, that would be surprising because we've seen number of inflationary data points heading into this set of data, right? Nothing to massively suggest we're going to get a slowdown. But markets believe, the general expectations and consensus here, that we will get those slowdowns, all right? So we're going to keep an eye on that. And that's obviously certainly going to dictate where this dollar goes. So obviously, structurally, remember on a monthly, we've been pushing to the north for 4 consecutive months. And obviously, so far in May, we're slowing down. And you know why? Because markets are pricing in 2 cuts now, as opposed to 1 rate cut. So this is obviously dollar negative. We either bounce at this trend line and go and print a new higher high if that inflation data and the retail sales remain elevated. Or obviously, if things do cool, we're going to break this trend and we're going to see some heavy selling for the dollar. Obviously, at the end of the day, we're going to trade what we see, but this is where a lot of the volatility is going to be coming this week from this inflation data and the repricing of the FOMC.